Welcome to Tax Central. In this video we will learn about HRA and how to calculate HRA deductions with example. So, let's understand what is HRA. It is a part of your salary provided by the employer for the expenses incurred towards rented accommodation. You can claim HRA exemption only if you are residing in a rented house. HRA exemption is covered under Section 10(13)(a), along with Rule 2A of the Income Tax Act. You can claim least of the three as HRA deduction. First, actual HRA received. Second, 50% of basic salary plus DA if you live in metro cities, or 40% of basic salary plus DA if you live in non-metro city. Third, rent paid in excess of 10% of basic salary plus DA. Let's understand this with an example. Suppose Mr. A stays in a rented house, works as a salaried employee in Delhi. He pays a monthly rent of 12,000 rupees and receives a monthly HRA of 15,000 rupees. How much HRA deduction he can claim on income tax? His salary slip given here, in which his basic is 23,000 per month and HRA 15,000 per month. Now we will calculate how much deduction he can get from his taxable income. First, we will calculate actual HRA received, which is 1,80,000 received in a year. Second, 50% of basic salary. Basic salary is 23,000 per month. Multiply by 12 months, and 50% of that equals to 1,38,000. Third, actual rent paid is 12,000 per month. Multiply by 12 months, and minus from 10% of basic salary, which equals to 1,16,400. Least of three is third one, actual rent paid minus 10% of basic salary. So, he can claim deduction of 1,16,400 from his taxable income under Section 10(13)(a). What if a person doesn't receive HRA? He can still claim deduction under Section 80GG. Under 80GG, a person gets least of the following as deduction. First, 60,000. Second, 25% of the total income. Third, actual rent paid minus 10% of the salary. Provided that the person or his spouse or his minor child do not own any residential accommodation at the place where he currently reside, perform duties of the office or employment, or carry on business or profession. Let's see another example for better understanding. Mr. A earns for lakhs annually after adjustment and stays in a rented accommodation for which he is not getting any house rent allowance. He pays a monthly rent of 12,000 rupees in Delhi. Calculate his HRA deduction. Here, adjusted total income means total income less long-term and short-term capital gains less deduction under section from 80C to 80U and less income under section 115A to 115D. Least of the following will be exempted. First, 60,000. Second, 25% of 4 lakh, which is 1 lakh. Third, actual rent paid 1,44,000 during the year less 10% of 4 lakh, which is 1,04,000. Here, first one, 60,000 is the least. So, he can claim 60,000 as deduction from his taxable income under Section 80GG. This is how you can calculate HRA exemption amount. Thanks for watching. Like if you find our video useful and subscribe for more video like this.